Greetings, Dr. Jeffrey Scott here, and this is my weekend market update for Sunday, December 1st, 2024. Imagine that. We are now in month 12. What a year it's been for the stock markets. The election, just a crazy year, but a great year for U.S. equities. And I have to say, as an alumnus of University of Michigan, turned out to be a pretty good day for us as well, knocking off our arch rival, Ohio State. My name is Jeffrey Scott again. htsidoc@gmail.com is my email address. If you're new to the channel, think about hitting subscribe, hitting the alarm, and you'll find out when I'm going to post these. And if you like this, hit the thumbs up so maybe more people get exposed to it by the YouTube algorithms. This is for educational purposes only. Anything I talk about should be taken in the spirit of education. The intent of this video is to demonstrate the tools of top-down analysis and how I apply them. I have my tools in TradeStation, TradingView, Wealth Charts, my trading app, which will be launched soon, and soon to be in Metastock. The tools are very similar across each of those programs. It's how I use them that I like to talk about, not really which tool is the best tool. Trading involves risk. You are solely responsible for any investment decisions you make. And you've got to assume that I might own or be short any instrument I talk about, and I might be planning on trading it on Monday. Trading stocks and options should be considered risky. You should consult with your financial advisor before making trades. And I have tools, as I mentioned, for multiple platforms, but I am an independent trader. If you like what I'm doing, you might want to consider going to stocksanddocs.com, where I post many days during the week. Unlike the weekend video, it is a very short video, 8 to 10 minutes. And if you fill in the little thing in the bottom, you will get notifications of when they're posted. This is done for me by becomeabettertrader.com and Wealth Charts, and therefore I use pretty much Wealth Charts alone in that presentation. If you really like this stuff, just join my Top Down Trader Google group. It's free. There's no obligation. I built it to support my different products in the market. I send out videos. I'll send this video out right away so you don't have to worry about when it's posted or not. And I include some of the other videos I do, as well as demos of the different products. Just go to Google Groups, sign in, search for Top Down Trader, join, and I'll approve you within 24 hours and you'll start to receive my feed. As always, I like to look at the major markets, and this is an interesting week. First of all, in yellow are the major markets. You can see the equal weight S&P, a little bit better than the S&P itself. The equal weight NASDAQ 100, a little bit better than the NASDAQ 100 itself. Broadening out of the market. Broad-based strength, even ARK broke out almost 6%. This is 5 days, so this will include the prior Friday as well. You could see the returns on this Friday were positive on each of the major indices. And you could see over here that they've all moved much in the last 52 weeks off of the prior lows. The lows in the market were around November 6th, so we are now moving forward off of those lows. So markets were strong. What was weak? Natural gas, oil, and then semis. And this is the one thing here that is an opportunity or a threat. We'll look at SMH perhaps today, but we'll certainly look at NVIDIA sitting right at an interesting buy place. So a bounce in semis perhaps could take the markets higher. Looking at the sectors over the last week plus 1 day, you can see that only energy was down and discretionary real estate and even staples were leaders. What about market breadth? This is the Q Edge tool. We could see that 83% of the stocks in the S&P 1500 are above their midline. That's pretty bullish. And you can see 2/3 of the sectors were up, 2/3 of the industry groups were up, and just a little bit more than half of the stocks were up. So it was a positive day, but it wasn't positive for every stock, and a little bit better than a 50-50 session. Down here, you could see that if you look at 5 days, it was really a strong week. If you look at the last 2 weeks, it's been strong. If you look at the last month, it's been strong. So a little bit of deterioration the last 2 days in the market, which would be Wednesday and Friday. Here's the Q market breadth tool, and this is a composite of the NASDAQ and NYSE. And just to point out the things that I'm paying attention to, still mostly positive on an AD line and up-down volume and new high, new lows. The 13-week or 3-month new high, new low, it just came off of overbought, but it's still up at the top. Kind of going sideways with some narrow range bars here. And I look to the left and I remind myself that we did have a lot of Hindenburg omens fire. They don't always lead to a big crash, but you don't get a big crash without an Hindenburg omen. And usually you don't get a big rally after a confirmed Hindi either. If you look at the NASDAQ and the NYSE, you'll notice that the breadth on the NYSE eased some, while that of the NASDAQ is starting to approach that overbought territory. You can see we've had Hindenburgs on both. If we look across the other major indices, look at that 3-month new high, new low. And the purpose I wanted to show here is outside the Russell 2000 that's come back some, we are in fairly significant overbought areas on the major indices. If we look at my weekly timing model, and this version is from my app because it's got the buy-sell signal down here, and you can see in the spiders, the Qs, the diamonds, and the Russell, we are in a buy. And you can also see in the green, it tells you what the number of stocks, new highs versus new lows over the last 3 months are. 95%, 96, and 90 are all very extended, suggesting we could be approaching an area that we might see a reversal. On the dailies, you could see the big change from a week ago was the Qs have now gone into a buy. So as much as I don't believe this market goes much higher, that I do think we have a correction coming. But I don't know when. Is it going to be after the inauguration? That would seem to make sense. Could it be sooner? Absolutely. Could we top? Could we have already topped? All these things are possible. All I can see right now is that my daily and weekly timing model across these 4 indices says be long. Here is in my app, you could see for 1 day, Qs led up 0.88%. Everything except for small caps finished in the upper part of the range. That's interesting. And if you look at 5 days, if I looked at 5 days, you could see that small caps really led on the 5 days, up 3.17. And the 1 day change, discretionary, followed by tech, followed by industrials. And if you look here, silver mines, video games, clean tech, uranium, and here's SMH, which we know had a rough week, was actually up 1.63% on Friday while being down 1.61 on the week. Over here, there's not much different than the S&P 1500, but I break out sectors, industry, stocks, advances, and how many are above the midline, the Bollinger Bands, to look at the NYSE and the NASDAQ. Don't see a big difference among those. Rates fell on the week. You could see the 10-year was down 5%, as was the 30. So we're going to have a rate cut. We did have some inflation data. I looked at things and thought it was a little hot, but perhaps it wasn't hot enough to avoid a rate cut in December. I think that's going to be the next big event we'll be looking at. But you could see stocks go up when rates fall down. Is there a recession in our near future? Well, we had the inversion of the yield curve, and then we crossed back above the zero line. Well, these gray bars represent a recession that occurs every time that happens. So, yes, we'll have a recession. We always have recessions. And the gray bars are delayed, so we don't know when that recession is going to come. 10 minus 3 is still negative. This might be starting to get nervous. The Philadelphia Diffusion Index for Federal Reserve General Economic Activity was minus 5.5 when it came out about a week and a half ago. So it's gone negative. The recessions usually start from minus 20. So we could still get much weaker before we see a recession. And we're not seeing any tightness on credit. So money's still available. So is there a recession in our near future? There always is, at least in the future, but I don't see it happening until sometime in the beginning, maybe the first quarter. Again, maybe after inauguration. This one I should have retitled. It's not bad breath. Breath improved as we hit new highs. So sorry I forgot to update that. But you can see the 3-month on the Warden 13-week 3-month actually backed off, which isn't a bad sign for the markets. Buckets and edge rater look similar to what we looked at in the Q tool. This tells me that very few stocks are above or below their Bollinger Band, so there's really no signal except very bullish here. Now, the Hindi's been triggered multiple times, and I put into that, it feels like 2021. The Hindenburg, especially on the NASDAQ, was going crazy at the end of 2021, and I think we know what happened in the U.S. markets, at least in the beginning of 2022. Markets turned down. Boy, this is what happens when I try and get things done on a plane. Markets did not turn down. I'm going to pause and fix that. There you go. Markets up again. Now, I always throw out the tail and the head because this gray line shows there's like no stocks there. So if you look between here and here, you could see that the market was broadly elevated up 2%. The thing that blew my mind was when I looked at relative strength versus response, the best performance was in the low relative strength stocks. That's interesting. No earnings did just as good as positive earnings, and stocks that were distributing the prior week outperformed. And that just tells me that we saw some rotation. Last week, everything was up on this list. And I thought what was interesting this week is that, and I'm a growth guy, so my holdings were not as good as the overall S&P 500. But interestingly, if you look at the growth indexes, IBD 50, the 85, which is the weekend review, the Marcus Smith 250, they were all down on the week. And this would be from end of day Friday last week to end of day Friday this week. So it didn't look at Friday a week ago. It looked at just the 4 days. So, still very positive week, but not as positive as the prior week. Know your news and earnings. We got some ISM and manufacturing, construction spendings. We got job openings. We got ADP employment. We do have some Fed head speaking, the Beige Book, jobless claims, and the monthly employment data, and then more Fed head speak. There's plenty of news there to move the markets. I think the market's going to be listening to the inflation data and handicapping whether or not we get another cut in December or not. And we still have plenty of earnings. Salesforce.com, that'll be an interesting one to watch. Some retail, solar, still some banks. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. This is the leaders index that we put together on the 24th. And what Ian Woodward taught us is as long as this is going up, it's unlikely that the market's going to break. And this will break before the market. So going up means let's keep it above the 17-day. We're well above it. Even pulling back to the 50 doesn't mean the market's over. Right now, it's strong, and this is a group of about 40 stocks that are leading the market. This is an index that I formed to watch to see how the market, to see if this gives me an indication of what the broader market's going to do. So we closed the short session on Friday on a positive note. Record closing highs for the S&P 500 and the Dow. Small caps led over the past 5 trading sessions, and ARK has broken out. I mentioned some rotation this week as growth lagged. Timing models still say to be long, although I'm not ignoring the Hindi signals and new high, new lows. I'm pretty invested right now, but I have stops. I raise my stops. And then I trail my stops so I don't have to manually raise them. I don't lower my stops. If the market gaps against me, my stops won't help me. But typically, when these markets turn, I will get stopped out. I will also probably trim some positions. It's never wrong to take half off and book some profits, in my opinion. Let's go take a look at some charts. It's an old thing. And let's pull up wealth charts. So this is the week that was. And you could see not much happened on Wednesday. And then we had a nice gap up and a strong day on Friday. Now, I'm a little, it looks like it's right. That's kind of funny because I don't think the market was trading here. So it was a decent day on Thursday and Friday. Markets ended up, as we know, closing higher on the week. If we look at the performance of the various components, small and mid cap here, let's look at this, see which are the ones that were lagging. This is a 5-minute chart. So Russell, you see, moved up and then traded sideways into the end of the week. Mid caps, just look at the Russell. I think what's happening is the ETFs traded after hours, but they didn't move much. The Qs in, a little bit less than the S&P. The Dow looks like the S&P, and then the S&P is the candle. So you can see they did not all function in perfect harmony on Friday afternoon. And you saw that the Russell finished in the lower part of its range. If I look at the daily spider, you can see this line tells me that the program is sensing some divergence. Moved up a little bit on Friday, up 0.62%. As I've mentioned before, this is a old thing. I can probably pull that. We have probably support here where we're at. A breakdown here, you've got the 50, and you've got this prior high, which are going to be about the same place if we pull back. You have these prior highs over here, and you got the 200 coming up. So you've got lots of support underneath. You don't have a whole lot of resistance above. Nothing says we can't go higher, but I think we just have to be aware we've had a long run and that possible divergence is setting up. But you could see here, even though you had a bit of a pullback, you still went higher. On the weekly on the spiders, you could see fresh all-time highs. We closed just off those highs, up 1.18%. We look at the Qs, kind of sideways the last 4 sessions, positive on Friday, up 0.88%. Has support right underneath with that 50. It is now in a buy on the timing model, so I'll just move that over. And so right now, the Qs look fine. If I look at a weekly on the Qs, you could see up, but not that exciting of a candle, up 0.78. Maybe it's a little bit of a hammer. Maybe it's going higher. You can see it's just a bit off of its all-time highs. Now back to daily. If we look at the diamonds, they too set an all-time high on Friday, all-time closing high. We're up on Friday 0.5%, and on the daily, let's go to weekly. You could see a nice weekly move of 1.5% up to all-time high territory. And lastly, of the ones that I closely follow, the Russell Daily, kind of consolidating here after a big run. It did on this candle set a new all-time trading high during the day, which is great because it had been since 11/08/2021. Remember what I said this is reminding me of? When we saw that last high. And if you look at the weekly on the Russell, you could see gapped up, doji at the top, plus 1.30. I don't like that doji. Indecision, although it could still go higher. So the markets, it's hard to say the markets don't look pretty darn strong. If we look at the weekly VIX, with the markets doing well, you'd expect this to be doing poorly. And on the weekly VIX, you could see it was down over 11%. Something that I did like seeing on Friday was the dollar was actually down 1.5%. And as we've been talking about, we are in a range, getting in a range that you'd expect the dollar to run into some resistance, certainly if you look at the closing prints. And so maybe we're seeing that the dollar might weaken here. The market bottomed November 6th. What do you think happened in here? This is when we got into November 6th. The dollar fell and the markets rallied. So that could be supportive of the U.S. markets. Looking at commodities with the dollar down, you can see gold was up a tad, 0.86%, silver up 1.71. Both of them are now below their 50. Oil continues to really struggle here, failing the 50, down a bit, 0.15%. Certainly look, oh, that's because look at the prior session. I almost always laugh at this one, no matter how good natural gas is, it still can't get above its 200-day moving average. I think the day that it does get above the 200 moving average is probably the day I'd be looking at buying it, but it's just struggling here. And then the 10-year, like the dollar, has been dropping. And you could see down another 2% on Friday, coming into that 50-day, which could act as support. If we look at the weekly, whoops, you don't want that weekly, you want this weekly. You could see a pull back to the 50 weekly, 5% down on the week. You know, it's great for the U.S. markets when the dollar and the 10-year are falling. We talked about the timing models already. Let's take a look at the hourly sectors. And where would I say the strongest part of the market is right now? I think a couple of them looks really strong to me, but probably the strongest because of where it finished on Friday with that greenish move is discretionary. Excuse me. Staples. No, discretionary. I was right the first place. Sorry about that. All right. So your discretionary is one of your best. Communications doesn't look bad. Industries don't look bad. Even the ones that have been lagging, Staples has moved up off the bottom. Real estate until Friday was moving up. Utilities had moved up. So we're seeing these are ratio charts comparing the individual sectors versus the spider. Materials clearly outperforming, technology now outperforming, and healthcare has been outperforming. Biotech starting to look interesting here. Not surprising, biotech likes to run into the JP Morgan meeting, which is the second or third week of January. I think it's the 12th, so the second week of January this year. Now, if I go into the stock scanners, let's just go into the heat map and start by looking at the S&P 500. And let's look at the large caps that we all know and love. Apple, we talked about last week. So, well, it was a nice place to consider breaking out, sitting on the 50. And it did. Apple had a super strong week. On Monday, it had volume and momentum. The breakout candles were back here. And Apple looks great here, not extended, relative strength at OBV. I like buying pullbacks. It just took out its highs. Looks great. Tesla has been performing well. A little bit of a sideways move here. Might be setting up as well. NVIDIA, I talked about SMH. Look at NVIDIA. Had a doji on Wednesday on the 50, a positive move on Friday. And this looks like a perfect place here to see a rally. So I think a rally in NVIDIA would do a lot to carry the markets. A breakdown the 50 will hurt the markets. Microsoft kind of just doing nothing here. Now, is it going to build up some energy here? It's in a weekly squeeze. Is it going to take off from here? It could. Right now, I'm watching it. Meta, a lot like Microsoft, but this one has had such a great move. I like to see it break above the 50. Amazon holding above the 17. Netflix, typically the earnings play of the year in the first, right after, I think, Martin Luther King Day in January. But Netflix, after a pullback, looks okay. And let's look at Google. Bounced off the 200. Last week we talked about would this not be a great place historically to buy Google. Hasn't done much, but at least it seems to be moving higher. So you look at the big name stocks and you really don't see a problem. Problem child is SMCI, which you could have predicted this. It really rallied when they named their new auditors, but ran right into the 50 and failed. So it doesn't look weak for the big names. We go into Wealth Scanner, which really did weaken last week. Let's see how we ended this week from a rotation. Well, we got a few things above 800. That's good. MLPs are still strong. Dividend payers, REITs, retail, utilities, dividends, communication, dividends, insurance, and then we dropped below 800. Boy, those were not rah growth names, except for maybe communications. All right, so then I'm a top-down guy, so I liked communications, I liked discretionary, so let's just run those lists. Now, sometimes if a list has been doing well, the stocks have had a big run and it's too late. Let's see if there's anything in discretionary that's giving us an interesting picture. Yeah, this is one that I looked at, but I just have a hard time buying Jack in the Box. Basing here, took out the 17, sitting on free parking, relative strength OBV turning up, not extended, but it's got that 200-day moving average overhead, which might be a blanket. MNSO, this one looked more interesting. Here's a stock that has been in a pullback, gone a little bit sideways here, kind of a contraction of this. Is this a volatility contraction pattern? And then look at what happened we had earnings, which weren't great, and we broke out above the 200. We had 5 dots the last 2 sessions, volume, breakout, momentum, 2 volumes, 2 momentums, not extended, relative strength and OBV look good. This one looks interesting, MNSO. Vista Outdoors looks like a takeover. We already looked at Amazon, Cracker Barrel. I just, again, like Jack in the Box, I guess because I don't like their food, but here's a stock that's gradually moving up, broke out above the 200. The 50 broke out above the 50 on the weekly. This one looks interesting too. 45 versus 36 cents. That's a launch indicator from Rob Hoffman coming out of the squeeze. Look at relative strength and OBV. Now you're going to say, but Jeff, you told us don't buy when you're above 95 on the high low. I say that, but not when you're sitting on top of the 200 and all these are coming together. If you go sideways long enough, which this has, then it really makes any move, exaggerates it on the high low. So I ignore the high low on this one. So that's a couple of discretionaries. I said that industrials look good. And they're all at 1 dot. So let's see. No, not interested. So ETN is, I think, electronics, electrical. Nice uptrend. Floor is a construction. I don't think any of these things really rocked my world. Look at Eastman Kodak. Once was a big flyer, wasn't it? So I don't think there was anything here. XPO Logistics, that one did look interesting. Move up, sideways move, looks like it might be ready to go higher. All right. And then how about financials? Cheap stock, not too exciting. Navient. Now, UBS was one that I thought looked interesting. It's very gappy because it's a ADR, but look at relative strength, breaking out, OPV breaking out, not extended. You have breakout and momentum, an EMS signal, and you broke out above the 17 on a stock that's been an uptrend and pulled back. So I did like UBS. And then lastly, let's just go bottoms up. Let's take my weekend review list, which is a large list of stocks that I put together, even larger than my combo leader. Let's rank them by dots. Interesting, nothing with more than a couple dots. That's kind of unusual. Let's see, Veristem was one. Now, again, as I said before, I don't always buy things below the 200, but here is a biotech stock that was basically dead. And then all of a sudden, volume has come in out of a squeeze, relative strength and OBV look good, and it makes me wonder what their news was. So that went on my list, and I'm going to do some research on that. C3AI, this would have been a good time, and you could see it have volume breakout momentum, relative strength and OBV. It's starting to get a little bit extended. We looked at Amazon, Cracker Barrel. Now, last week I talked about fertilizer stocks. Excuse me. They haven't had much of a move yet. So I'm still going to be looking at them. Costco, I mean, this one just blows my mind. In fact, here's what really, and I mentioned this before, and I don't really know, do I just ignore this? But does valuation matter? Costco is growing at less than 10%. It's got a multiple of 60. Walmart, and this is HGSI, by the way. Walmart, similar growth, PE less than 40. And Target, which just laid an egg, negative growth with a PE of 14. I just have a hard time with the PE on Costco. I love the store. Heck, I'm going there tomorrow. Hot dogs and cheap gas. What else do I need? And here's one that I saw last week. Don't know anything about the company, but I love this. Sideways dead. Going back really to June. And then earnings came out. They lost 7 cents versus 38. Had a big move on earnings on volume. And I love this retest of the 200. This is one I like to watch, see if it goes higher. Carvana, again, another stock I just don't understand. I guess it's an internet darling and not an automobile dealer. But on a massive run, interestingly, because of this kind of sideways move in here, not extended. Go into my buy watch and see other things that I thought looked interesting. I will tell you it was a lot easier to find things to buy than things to short. Among the biotechs, this one had an interesting breakout. This is Arrowhead. I believe they announced a licensing deal, but look at the volume, a launch indicator that came in. Yeah. There's Iris Energy. Pullback and a breakout, decent volume, 4 dots. A lot of gambling stocks made my list. I picked MGM because I liked its valuation, but coming out of a squeeze, but still got that 200 above it. Restoration Hardware, it's alive again. It's got earnings coming out soon, I believe. When were these earnings? These earnings were in September, but consolidating up here after a big run. SAP, another ADR, but uptrend, sideways move, and a breakout. People ask me which stocks do I think are likely to be bought out. Shutterstock is one that I own, that I actually had it down at $8 and it had some positive news. I sold some because I like booking profits, and then it had another gap up as he got a bunch of people started giving it some upgrades and price targets. And I think we'll just look at Wolf. Uptrend pullback. If semiconductors turn around, this one looks like it's setting up. Relative strength OBV look good, not extended. So that's a number of things that I'll be looking at. I really think it is what the market does. That if this market continues higher, and I'm long, I have my concerns about this market, which I make very clear, but I'm long, then I think this might have an interesting move as well. I think NVIDIA is going to be important. Obviously, the rate increase is going to be important. But just to finish up with a seasonality, this is interesting. If you look at the next 4 weeks, despite the fact we're in a good period of seasonality, the Q's minus 0.29, Spiders minus 0.36, Russell minus 0.65. Natural gas, really don't care too much about that. And that's the bearish ones. Silver up 6.8, gold 352, and oil 2.73. And let's just look at a couple of these. Let me set my dates right. Let's go out. So we're going to go 12/1. Let's look at beginning of January. Okay. So let's see. Oh, let's see if I can make this work. Maybe I need more data. Well, it's not going to cooperate with me. I wanted to set my dates to look at the next 4 weeks and show you the various indices. But I think we're just going to leave it on what we showed you here. So I guess the message is be careful, enjoy the ride. Don't be the last one to get off. Use stops, and don't be afraid to take some profits. Join my top-down trader group. You'll hear more about my new trading tool called Market MRI Pro. And we'll see you next week.